We are back here on Live Now from Fox. We always appreciate you joining us here. Live look at the White House here, where President Biden is soon to arrive here. And the big news today, really, he is expected to announce that student loan forgiveness of $10,000. We'll have a full breakdown a little bit later here on Live Now. But I want to join right now a special guest, Fox Business's Madison Allworth, joining us here on Live Now. We appreciate it. And, you know, this is a big day for a lot of borrowers. But we're also going to be talking about how the cost of tuition is going up in so many colleges. Madison.
Hey, Mike, thanks so much for having me. You know, if the White House is trying to solve for that affordability aspect of college, the concern there from economists is that this is not going to do it. And that's because what we've seen over the course of the last, 70 years. So when you take a look at the price tag of private colleges, it went from an average of just below $3,000 in 1971 to an average now of $51,690. That's in 2021. We're talking about 4 times the rate of inflation. So the cost of college far outpacing inflation. You know, if you do adjust for inflation, the cost today for private college should have been closer to $20,000 a year. But here's the thing, as federal aid increases, so does the capacity for colleges to charge more. One study from the Federal Reserve Bank of New York finds that average tuition increases associated with the expansion of student loans is as much as 60 cents per dollar. So if the student loan handouts are granted today, we know what happens next. You see that expansion in cost. You know, I highlighted private colleges at the top of the report, but I also want to talk about public colleges. Adjusted for inflation, today's cost of a public college education should have been closer to an average of $10,000. Instead, it's above $20,000. So as you mentioned, nothing has been announced yet. We should be getting a decision this afternoon. And if we get that decision, we can expect the cost of college would also increase. Mike?
Yeah, and Madison, that's troubling for a lot of people, especially, it's really two-sided because you got the people that paid off their college that will be upset about this decision. And then when tuition goes up for everyone else that it hasn't even entered, I mean, it's troubling on so many aspects.
Right. I think anyone who has a loan, of course, if you're going to tell someone I'll give you money, why would they, shy away from that? But the reality is, one, the money has to come from somewhere. And then the second part, which we outlined here, is that that money has an impact. It's not just on that individual borrower, but it has an impact on the system as a whole. If these colleges are told, essentially, people are going to get more help, they know that they can raise the cost of college incrementally with that increase in help. So it might help some people right now, but overall, it's going to drive up the cost of college. And another big aspect of all of this is the inflationary aspect. You know, those loans and the college, the payments on federal loans for college, they've been paused now for over 2 years. If that's resumed, we get people paying that again. And then they also get, this $10,000 potential help. That frees up more money to go back into the economy, which could be a good thing, but right now we're seeing record high inflation. And so if you have people able to buy more goods, further driving up the cost of those goods, we could see a further impact on inflation as well. So short term, inflation goes up. Long term, you also see the cost of college go up. This is, and this is really outlined not just from, I went through the numbers. This is what a lot of economists have looked at. Think tanks are looking at this because what we do today will have an impact on tomorrow and colleges for years in the future.
Oh, absolutely. And you know what this reminds me of? It reminds me of $15 an hour. Remember everyone that wanted for the fast food industry, and they said, okay, you want $15 an hour? Now we're going to replace you with machines. And you just did a report last week on Flippy. And how Flippy's taken over flipping burgers, and now it seems like it's coming to that, doesn't it?
Yeah, I think that's, it all kind of factors in together. It's when you increase the cost of something, people know that they can, or if you increase access to money, you know that you can charge more. Flippy is interesting because right now we're seeing, some places are increasing pay, but a lot of people don't want to work in the hospitality sector. So Flippy is solving for that problem at a time when people aren't working, but also at a time when it's very expensive to afford those workers. Getting back to the college aspect, like I said at the top of the report, if the White House is trying to solve for an expensive college education, that it college has gotten too expensive, which we see, right? We saw it adjusted for inflation versus what it actually costs today. If they really want to bring down the cost of college, handouts has not proved to be the way to do that. Be we should instead be looking at financial literacy in high school. Are people understanding what it means to take out a loan, or how much their college education will be a return on an investment for them? We should also be looking at just the cost of college in general. What is being done to incentivize schools to make their education more affordable? If you just hand out money to one person, the receiving end, the college, knows that person has more money and can increase the cost. We should be looking here and what we can be doing about the colleges, and we should be looking at the individual borrowers. Do they understand the loan? Do they understand what debt is, interest rates, all of those things? We're potentially adding more onto a problem that clearly is in existence, considering the run-up in the cost of college over the past, like I said, 60, 70 years.
Oh, for sure. And I like what you said about financial literacy. I mean, I think that is so important. And too, when, if they feel like, oh, I could take out a loan for a student and it'll be canceled, it doesn't work that way in the real world. Talk about credit card. Can you call up your credit card company? Can you call up your mortgage right now and say, you know what, I'd like you to just cancel about 10,000 of it. Real world is going to wake up real fast for these people.
Definitely. And, I spoke to some people yesterday on the street getting their take on student loans and student loan forgiveness. And they brought up that exact point. The federal government is now offering to cancel out their car loan or their mortgage. So it's not the way that borrowing money works. And interestingly enough, when the federal loan system started, it was actually, it came out of, I think it was during World War II that they started it, or shortly thereafter, and it was to get more people into engineering, science, and education degrees. Those were the first three fields that were eligible for federal student loans, because as a country, we needed more people within those fields. Those are also fields, especially the first two, that have a lot of return on investment. So, you're borrowing money, but then you come out as an engineer. So the value there, and look, I went to a liberal arts school, but luckily, I had parents that were able to talk me through the loan process, the value, cross-comparing these schools, also the student financial aid aspects. There's a lot more that goes into it, just kind of handing out cash. Like I said, the big thing, if this is trying to make college more affordable, I ran through the numbers, it does not. In fact, we should expect the cost of college to go up as a result if this decision is made.
Madison, well said. Thank you so much for your insight and your update on everything related to this. We appreciate it right here on Live Now from Fox, as always.